Oh, hey, folks. Welcome to Pro Trader Strategies. It's Thursday. It's my webinar day. So make sure when you're subscribing, you hit the bell so that you guys get me when I'm unannounced, kind of like this. Supposed to be going off in a little bit, but just came in here because I found out, listen, folks, Twitter might be being bought by Elon Musk. He's trying to get it for like $52, $53 a share. Basically wants to take over that company by that purchase. Now, yeah, I don't know if it's necessarily going to happen, but it's sure getting folks to think that this could really come to fruition where somebody gets in there and starts stirring the pot, really. All right, so usually what I do is talk about economic data, see how that impacts the markets, then talk about some geopolitical stuff. But let's get on with the economic data real quick, because across the pond, we've been talking about this. Coming into this week, it is a holiday. Usually Europeans, folks overseas, take a little bit more of a vacation time around Easter, and it's already starting to show up where we know that folks are in like New Zealand, in Switzerland, they're already taking their bank holidays, and then tomorrow, being Friday in Europe, it's pretty much going to be shutting down. So we're going to be looking at real compression of volumes here coming into the last couple of days. Now, what does that mean for the markets? Well, I would say that with the lack of volume coming in, there's not going to be a whole lot of institutional type money coming in. It might lead one to believe that there's going to be some negative pressure there. On Fridays lately, we haven't really necessarily seen this heavy selling pressure going into an unknown weekend or like that type of binary type of event, if you will. So we've been seeing a lot of equities have some strength into those. Equities are seeing some strength going into the Fridays, which I would normally see weakness or expect to see weakness going into something where you really can't have a handle on your position when things are happening, right? That's the bottom line, really. So crude oil is continuing to climb. We are going to be looking at more manufacturing numbers, retail sales coming out, like we talked about here in the United States, coming out better than expected. I think it was retail sales coming in. Oh, sorry, they just missed slightly by 0.1%. The one big thing is unemployment claims coming out a little bit hotter than expected, 185,000. Or those folks that were discouraged workers I talked so much about, when they fall off the unemployment list, that means they no longer are seeking work and therefore they can't collect unemployment. So they're not a statistic. They're a discouraged worker. They don't show up anywhere. Well, now when they start looking for work and say, hey, man, the job market may be getting a little tighter, or they just can't find the job that they want, then they start filing for unemployment. Well, that's where we're starting to see these spikes happening. Importer prices, that spiked a little also. We're continuing to see inflation with the war in Ukraine. That's driving inflation of all raw goods. Keep in mind that when we have everybody talking about batteries and stuff like that, that's the mining. We're going to be cranking out mining because we need metals like they are going out of style right now. So that is what is going to be driving the metals markets. I would say risk is way to the upside across the board on anything from copper to aluminum to magnesium. Anything that goes into a battery right now, they're going to basically rip off the entire crust of the earth to find that stuff right now. All right, bonds. No real place to go. I am looking for a nice little bounce here in bonds, some maybe fear in the markets to get these interest rates to come off a little bit so that we can have this price rise. Remember this product of inverse relationship. As the price rises, then interest rates goes down. So what we're looking for is for some price to rise there. Interest rates coming off, I don't think that's sustainable. So therefore, we could jump on the bandwagon there. That was what I wanted to talk about with crude oil. I was like, trying to think of what the crude oil inventories were yesterday, and I was talking like, I don't think it's going to make much of a move based on the inventories unless it was way out of whack. And remember, I gave a wide range yesterday about the way out of whack there, and a million barrel build. I thought we'd really see a nice little sell-off here if we saw somewhere in around a 6 million barrel build. Well, we got a 9 million barrel build, folks. So that is over 8 million barrels than what was expected there. Some of that could be due to the releasing of the oil reserves there, but I really think that we're probably starting to see some build here with the prices as high as they are. Folks are really starting to try and push that work from home thing with their bosses. All right. So we've gone through this whole transitionary phase with COVID and the work from home, and a lot of companies have streamlined that process, figured it out. Well, yeah, they wanted folks to come back into work because then it creates that corporate environment, and folks have better brain trust ideas, or can really work problems out better when you're together. Well, but the fact that we've gotten through this cycle, bosses aren't as worried about having folks work from home. So we're seeing a lot of this with higher prices in gas. I've had folks talk to me about, hey, I need to find a job closer to home, or things like that. Or heard friends talk about that because they don't want to be driving 45 minutes to work with gas prices the way they are. That really eats into your pocketbook. So crude oil, do think we need to see some correction here. Like to see it get back below the 50-day simple moving average, and forget about $100 a barrel. Bonds, like I said, sell to the upside. Anything on a rally would be looking at covered calls, which is what we're looking at today in our webinar. I'm going to be doing a webinar this afternoon on short calls. We can layer in there that covered call aspect of that, but please check that out. Make sure you guys are subscribing with the bell. All right. Gold's going to continue to climb here, folks. I think that we're going to see weaker dollar, stronger gold here, especially if we're seeing inflationary pressures across the board. I think that gold is going to follow suit. Bitcoin, on the other hand, although we've gotten a confirmation of a bit of a bottoming pattern here, just feels like there's no real follow through right now. And I've got a trade this afternoon to the bearish side, not in Bitcoin, but a product related to Bitcoin that we might be able to take advantage of with the short call strategy. All right, Dow Jones Industrial Average, everything's right at the point of control, folks. I've talked about this, and it feels like I'm talking about it until I'm blue in the face. We need a kick in the pants to get outside of that range there. NASDAQ has sold off a little bit more, got a bit of a confirmation here, but it just can't seem to sustain a move above the 50-day simple moving average, which would be confirmation of some stronger, some shorter term strength. Right now, it's just showing short-term weakness, and the market really is going to struggle here. And I think because of the tech sector being as volatile as it is, and folks wondering about the economy, that's going to be one of the first things that starts to show the cracks, right, or the kinks in the armor. All right, E-mini S&Ps, what do we got to do? Well, we got to sell off to the point of control, really, for a correction here. But we gotten above the 50-day simple moving average in the E-mini S&Ps, and this is all kind of following suit with what we've been talking about recently in these market commentaries, or the spotting the trade videos, is the fact that the E-mini S&Ps, the Dow Jones, were right now probably going to be the place where folks are going to be seeking refuge, and the blue chips, and maybe finding some value in the E-mini S&Ps, because the NASDAQ has just had all the limelight on it. And when you've got all the limelight on you, wow, when you mess up, everybody sees it and the market corrects. For the NASDAQ, folks are trying to find value in the E-mini S&Ps. But with that said, any type of major correction here, the first thing that's going to fold first is going to be the E-mini S&Ps in my eyes, and could see an exacerbated down move if we get that kind of correction. I don't really foresee us getting that far down to where we even attempt to get back down into this trend channel. I think that that's over now, folks. I think that we're going to start seeing some lower some higher highs and some higher lows here. I don't think that we're going to see a massive rally to the upside until we see some of these geopolitical and global tensions ease a little bit. But in the meantime, the thing to do is, in your portfolio, this is an opportune time to start looking for things to add into a long-term portfolio, whether it's a 401k or an IRA, I should say, that you're self-directed. Hey, folks, we need to look at selling some puts in this environment. We get the big, juicy premium, and if the market comes down there, then we actually buy it at that level. Somebody was telling me, you at least get paid to stand on the tracks. That being, if you go out there and just buy the stock and put it in your portfolio, well, you didn't get paid for the risk involved on the downside. When you're selling puts, at least you're getting paid for that risk to buy the underlying. It's brilliant. So anyway, that's all I got for you guys today. Just keep in mind, be safe. It's going to slow down here probably in volumes. The next couple of days, especially tomorrow, is probably going to be locking up where folks are heading out the door early. So lack of volume would risk to any type of whim, to be honest. All right. So not really much of a risk assessment other than gold risk to the upside, bonds risk to the downside for sure. Crude oil risk is still to the upside because folks are still trying to push that issue of nobody's making any new wells. So there's a lack of supply coming into the markets. We need to continue to open these wells and produce more because the demand continues to rise. All right. That's all I got. Hope you guys have a great night. Check it out this afternoon on Cracking the Code to Trading Options. All right. We're doing the short call. Oh, that was terrible. If you can't get that, take it easy. Bye for now.